Hello, and welcome to the Banker's Fresh Perspective series in association with Deutsche Bank. I'm Joy Macknight, Deputy Editor at the Banker, and in the studio with me is Marc Recker, Global Head of Institutional Market Management, Cash Management at Deutsche Bank, to discuss how the payments landscape is being dramatically reshaped and what the future payment system will look like. Marc, thanks so much for joining us today. So what are the main drivers of change in the payments world today?
Look, there are a couple of drivers. Let me start with the first one. The first one is the client demand. When you look at clients, in your personal interactions, clients do have, or client want to have everything instant, everything, they want to have it directly, 24/7. That is really driving the first change of the payment demand. You do as well, from a payments perspective, clients do compare us with the big guys like Google, Amazon, Facebook, Apple. They are creating a complete new user experience that is also transposing into the payments landscape. As a second topic, that is then also the kind of transformation that is already happening in the payments industry itself, like the modernization of our high-value payment systems. You have in Europe Target 2, you have in the US FedWire and chips. Everybody is modernizing from the central market infrastructure perspective their payments rails to enable the future of the new kind of payment schemes. In addition to that one, you have seen the rise of instant payment systems across the globe. You have seen it in Australia, you have seen it in Singapore, you have seen it already in the UK from a long time, but now we have also in Europe the first regional instant payment system that is also really shaping the way how we are going to do payments in the future. A third topic, which is not to be underestimated as well, is also the regulatory landscape. The regulatory landscape is also, in my view, changing a bit with the introduction of the 4th AML directive in Europe, the upcoming 5th AML directive. That is really the point where the level playing field between the legacy banks and the new payment service providers will be aligned, and it's really good to be seen how that will work out.
So let's go back to the first point that you made, which is about changing customer demand. What are customers really looking for, and then how are the banks delivering on that?
The first topic is security. Clients do expect security from their providers. Especially, we did an analysis with corporate treasurers. They want to work, they prefer to work with banks because they trust banks more from a security angle. And the industry is doing a lot to keep that security level on a very high standard. The second topic is around speed, efficiency, transparency. There I only give you the example. Those were the drivers why the industry, under the coordination of SWIFT, came up with SWIFT GPI a couple of years ago. There was a need from the corporate client base to have more efficient cross-border payment transactions. I would say not for free, but in a more transparent way and in a more speedy way. And the industry is really going full embraced behind this industry topic, and we hope to see GPI growing in the future.
But what role will FinTechs play in the future payment system, or what role are they playing today?
I think we can be today really the witness of a huge level of collaboration between legacy providers and FinTechs. It's really about, first of all, a bank needs to embrace it in their own DNA to allow FinTechs to come on board and to collaborate, and also vice versa. It's not about the FinTech standalone, it will never work out. They have potentially the better technology and the more agile way of working, but the banks do bring also a lot of value into that relationship. For example, when you see the stake that Deutsche Bank took into Modo payments that has been announced a couple of months ago, there we looked really at a market problem, because clients do not only want to pay legacy bank accounts across the world. Their need is to pay as well into mobile wallets. So we looked into opportunities, and the collaboration with Modo is the perfect example how we can tackle such a market problem.
But how should banks and market infrastructure players, how should they be working to really deliver what the clients need?
Let me start with the market infrastructures. They are really responsible to providing the rails between the banks and the market participants to allow future developments. You see it, like I said earlier on, in Europe, they are developing the new target system. The new target system will be there also 24/7, 365. It will allow instant payment settlement through RTGS, through central bank money, which is a complete game changer. We have seen how it can happen already in Australia on a smaller scale, and we will see it happening in 2021 on European level. And this is, of course, then enabled the industry to connect to these rails to provide at the end better services to end clients. Because you can have the best instant payment system. If you still settle over the weekend through collateral that you have to put against each other, it does not really solve the risk angle from an instant payment system that is operating 24/7.
What should the regulators be doing really to enable this new world?
I think regulators did already a lot of things. When you take, for example, one angle is regulators need to protect the end clients. When you look at it from a European angle, Payment Services Directive 2, where it was clearly stated in the directive that banks have to enable two-factor authentication on all end-user channels. That is something which is mandatory for all the financial institutions in Europe to provide this additional level of security towards end clients. That is one thing. On the other hand, regulators are also there to protect the financial system overall, with the fourth AMLD or with the European Funds Transfer Regulation, where by regulation you have to have full transparency from ordering client to beneficiary client in any kind of cross-border payment. So from a regulatory angle, it is a long way to go, but I think there are some good initiatives that are there to protect the financial system. Next to the regulators, there are also the industry itself. I give you only the example around the SWIFT Customer Security Program, where the banking industry, under the leadership of SWIFT, will control and will make the endpoint connections to the SWIFT network much more secure, and this will also be certified later on from internal and external auditors.
Okay, and my last question is really, what do you think that the future of the payment systems will look like?
From a Deutsche Bank angle, what we see, you have to have, first of all, the commitment from top of the house. You have to have the commitment for investment. You cannot stand still and sit for 5 years and doing nothing, because the market is continuously evolving. So you have to have the investments ready, but also you have to have in your DNA the new way of working, like opening up, being transparent to end clients, and, for example, opening up with APIs. When you see PSD2, for example, everybody was saying, oh no, the banks have to do something like a mandatory effort. We took it differently. We looked at PSD2 to create a new business model. We developed something with IATA around push payment solutions. That is something how we would like to see it happening in the future, that any kind of regulation, you should analyze it and to make the best out of it. From that angle, the combination of investment in technology, looking very agile and collaborate with FinTechs is one of the future elements of a new payment systems.
Excellent. Thank you so much for your insights, Marc.
Thank you.